What's going on, guys? Welcome back to another video. In this video, we're going to be talking about AMC, and there's a very interesting article that a user on Twitter found. I know it's been a little bit on Wall Street Bets, but it keeps getting taken down. So thank you to this user over here on Twitter, Kong Posting. That's how I was able to find this article. So essentially what this article is going to go over is the anatomy of a short attack, and it's going to go over all of the different strategies that hedge funds can use to push the price of a stock down. And once we go through this, there are going to be some very alarming similarities to exactly what has been going on with AMC over the past couple of months. And we're going to go over the exact examples on how they correlate. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down in my description below. All you have to do is sign up for an account, deposit over $100, and you get your 2 free stocks. Now, this is also a great way to help support the channel if you guys would like to, because when you get your 2 free stocks, I also get a free stock as well. And if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So let's get into this article posted by Seeking Alpha, and we can see here that this was posted back in 2014. So you could think of this as, well, is the AMC and GameStop situation going to be the final straw for more regulation against short selling and market manipulation? Now, the reason why I think that it could be is that we have not seen any significant fines or the hedge funds being punished at all over the past couple of years. Now, if one of them or a few of them get blown out by these situations, then we could see some more regulation come in. So now let's get into this exact article and draw and figure out the exact similarities between what is going on right now and what this article from back in 2014 suggests. So abusive shorting are not random acts of a renegade hedge funds, but rather a coordinated business plan that is carried out by a collusive consortium of hedge funds and prime brokers with help from their friends at the DTC and major clearinghouses. Now, we are seeing the DTC actually turn against the hedge funds. If you guys have looked at Rule 005, you guys would know that they're going to outlaw a lot of different practices of short selling. They're not going to allow the same blocks of shares to be sold twice, and a couple of other things as well. They're going to create some monitoring systems. So make sure you guys check out my older AMC videos so you guys can get a better understanding of what is going on with the DTC. So potential target companies are identified, analyzed, and prioritized. The attack is planned to its most minute detail. The plan consists of taking a large short position, then crushing the stock price, and if possible, putting the company into bankruptcy. Now, with the past year in the pandemic, it did not look like AMC was going to be able to survive. They were on the brink of bankruptcy already, and the pandemic did not help. So the AMC was a perfect target for these hedge funds. So bankrupting the company is a short home run because they never have to buy real shares to cover, and they don't have to pay taxes on the ill-gotten gains. So if they don't have to buy real shares to cover it, that's where it incentivizes them to engage in naked shorting and create these synthetic shares. When it is time to drive the stock price down, a blitzkrieg is unleashed against the company by a cabal of short hedge funds and prime brokers. The playbook is very similar from attack to attack, and the participating prime brokers and lead shorts are fairly consistent as well. So here are the typical tactics. So flooding the offer side of the board. Ultimately, the price of a stock is found at the balance point where supply and demand for these shares find equilibrium. The equation happens every day for every stock traded. On days where more people want to buy than want to sell, the price goes up, and conversely, when shares offered for sale exceed the demand, the price goes down. So the shorts manipulate the laws of supply and demand by flooding the offer side with counterfeit shares. This is where the naked short selling comes in. They will do what has been called a short down ladder. It works as follows. Short A will sell a counterfeit share at 10. Short B will purchase that counterfeit share covering a previously open position. Short B will then offer a short counterfeit share share at 9, short A will hit that offer, or short B will come down and hit short A's $9 bid. Short A buys the share for 9, covering his open 10 short and booking a $1 profit. By repeating this process, the shorts can put the stock price in a downward spiral. If there happens to be significant long buying, then the shorts can draw from their reserve of strategic fails to deliver. Now, this has become very important over the past couple of months, and here is why. So we've seen some really interesting information come out about the fail to deliver numbers. They've been extremely high, and they've all of a sudden fallen off. Now, there's a way for the hedge funds to actually hide this, and we are seeing this with GameStop, which is suggesting that they are hiding these fail to deliver. So when we come over here to the unusual options activity on Option Sonar, we can see that this $12 strike right here is going to have a volume of about 72 million. Now, there's really no reason for them to buy these $72 million calls unless they were extremely bullish. Or if we come over to the option chain, which is going to be very interesting to note, we can see GME, GameStop. Let's pull up their option chain. And if we come over here, we're going to be looking at the April 16th expiration date. So this is the monthly expiration date for April, and we're going to be looking at these $12 strikes. We can see that the volume that took place on Thursday was 4,045, and the open interest is only 543. So what this is suggesting to me is that these options are being bought and immediately exercised. So it's kind of faking that they are closing out their short positions. If you guys have done a little bit more research on this, it's kind of spoofing. It's not spoofing in the financial sense, but it's making the brokers seem and the institutions seem like they are covering their positions, but it allows them to keep their massive short. So coming back over here, we can see that strategic fails to deliver and flood the market with an avalanche of counterfeit shares that overwhelm the buy side demand. Attack days routinely see 80% or more of the shares offered for sale as counterfeit. Company news days are frequently attack days since the news will mask the extraordinary high volume. Now, here's where we get into some of the more interesting stuff, because this is what we've all been talking about over the last weekend, but this article brings it back to what was occurring earlier last week and the week before. So flooding the market with shares requires foot soldiers to swamp the market with counterfeit shares. An offshore hedge fund devised a remarkably effective incentive program to motivate the traders at certain broker-dealers. Each trader was given a debit card to a bank account that only he could access. The trader's performance was tallied, and based upon the number of shares moved and the other success parameters, the hedge fund would wire money into the bank account daily. At the end of each day, the traders went to an ATM and drew out their bribe. Instant gratification. So here is a very interesting example, which we're going to bring back to the AMC and GameStop situation. So Global Links Corporation is an example of how wholesale counterfeiting of shares will decimate a company's share price. Global Links is a company that provides computer services to the real estate industry. By early 2005, their stock price had dropped to a fraction of a cent. At this point, an investor, Robert Simpson, purchased 100% plus of Global Link's 1,158,064 issued and outstanding shares. He immediately took delivery of his shares and filed the appropriate forms with the SEC, disclosing he owned all of the company's stock. So keep this in mind. He owned everything. It only cost him $5,205 to do this, and the share price was 0.00434. Now, here's where it gets interesting. The day after he acquired all of the company's shares, the volume on the over-the-counter market was 37 million shares. How would that be possible if this one individual owns all of the shares? The following day saw 22 million shares change hands. Now, that should ring a bell for you guys, and this is exactly what has been going on with AMC. When we come over here, this is the OTC non-ATS transparency data. We can see that Citadel traded 1 billion shares in this last time frame. Now, we do have to keep in mind that this is just the total volume amount of the amount of shares that were traded. This also does not suggest that these are all shorts, all buys, or Citadel is even holding these, because Citadel is the market maker and the clearinghouse for a lot of the different brokerages like Robinhood and a couple of these other ones. But it is still very interesting to note that this short, the anatomy of a short attack is suggesting that this over-the-counter market is a very significant factor in these short attacks. And we can see that Citadel and the overall volume in the over-the-counter market at 2 billion is absolutely insane. And when we come back over here to the anatomy of a short attack, we can see it is more likely the SEC has not done anything about this fraud. Massive counterfeiting can drive the stock price down in a matter of hours on extremely high volume. This is called crashing the stock, and a successful crash is a one-day drop of 20% or a 35% drop in a week. In order to make the crash stick or make it more effective, it is done concurrently with all or most of the following: a media assault. The shorts, in order to realize their profit, must ultimately put the victim into bankruptcy or obtain shares at a much cheaper price than what they shorted at. These shares come from the investing public who panics and sells into the manipulation, which you guys obviously have not done. Panic is induced with assistance from the financial media. The shorts have friendly reporters with the Dow Jones News Agency, the Wall Street Journal, and all these others. The common thread, a number of the friendly reporters who worked for TheStreet.com, an internet advisory service that short hedge fund managers David Rocker and Jim Cramer owned. This alumni association supported the short attack by producing slanted, libelous, innuendo-laden stories that disparaged the company as it was being crashed. And that's not even all of it. We have a couple more things down here. We have analyst report that can come down and essentially just write bad analyst report and price targets about the company, planting moles in target companies, frivolous SEC investigations, class action lawsuits, and here is one of the most important things: pulling margin from long customers. The clearinghouses and broker-dealers who finance margin accounts will suddenly pull all long margin availability, citing very transparent reasons for the abrupt change in lending policy. We saw this back in January, and we are seeing this right now with Charles Schwab. We've adjusted margin requirements on certain securities. Due to recent market activity, we've adjusted margin requirements on certain securities. Please note, neither Charles Schwab nor TD Ameritrade halted clients from buying any stocks or selling any stocks they own, and neither firm restricted executing any basic option strategies. However, we've raised margin requirements on the following securities. We'll keep this list updated with the latest information. We can see that for stocks, 100% margin requirement for long positions, which essentially makes margin useless. You can't use it. If you have to if say you want to take a $100 position in a stock, you would have to put up $100 as collateral, so it makes the margin useless. So this 300% margin requirement for short positions used to be 150%, but now it has been bumped up to 300%. Now, long calls, long puts, and covered calls are permitted. Selling short put options is permitted if you have the available funds to cover the entire amount of the exercise. So that essentially means cash secured puts and selling naked calls are prohibited. So this is essentially a playbook for exactly what has been going on with the hedge funds and what they have been doing to AMC and GameStop over the past year. So I want to know what you guys think about this. Make sure you comment down below what you think is going to happen to all of these hedge funds and the institutions, or if we're going to be having some more regulation on shorting or market manipulation coming in the future when the mother of all short squeezes comes out. So that is going to conclude this update on AMC and GameStop. If you guys enjoyed the information and analysis that I provided you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And if you guys, again, would like to earn those 2 free stocks with Webull and help out and support the channel, make sure you check out that link down below in my description. So I hope you guys had a great long weekend and are excited for the week ahead, and I'll see you guys in the next video.